Hello, this is Donald Mitchell, and welcome again to Finance Magic Presents Video Snippets from Less Pain, More Gain 10 Strategies to Pay Off Your Mortgage Faster, plus other smart tactics. This snippet focuses on topic number 1, the origins of finance magic, and is video snippet 1B, the Finance Magic Booklet. I created the Finance Magic Booklet as a tool to use for myself as a loan officer, and the concept actually is quite simple. I have open-facing pages, and on the left I have what I call a financing net sheet, and the right a qualifying income grid, and the purchase price for each page is identical. And then I took the lower end of the price range where the market that I was, and ran the net sheet at that price, and then ran subsequent pages in $5,000 price increments until I got to the high end of the price range. So that all I had to do was turn pages until I got to the right page, and I had both of these open until I got to the right price range page, and I had both of these, the financing net sheet and the qualifying income grid, open with a wealth of information just to look at and read. Starting down the net sheet, at the top I have the purchase price, and then on conventional loans, this is the conventional loan section, if you make a 20% down payment, there's no PMI requirement, and you get a loan for 80% loan to value. But there are some programs, if you pay less down, that with PMI you can be approved. So I have 4 columns, one for the 20% down on the right, and then 10% down, 5% down, and 3% down, with progressively higher PMI requirements as you lower the down payment. In addition to the down payment, you have closing costs. So I have a box for the non-recurring closing costs. And because the Finance Magic Booklet became a product that I sold to other lenders, and because every lender's fees are different, I had to customize this so that the fees matched the fees that the lender was charging. The other closing cost item are your prepaid closing costs or recurring costs. These are not loan fees, but you got to pay them in order to close the loan. Things like your property tax, your homeowner's insurance, and your prepaid interest. The total cash needed for closing is the sum of your cash down payment, your non-recurring closing costs, and your prepaid costs. So I had a box that totaled those. Then the bottom of the net sheet page focuses in on your monthly payments. To calculate a monthly payment, you need a loan amount and an interest rate. So I provided the sample interest rate, and then to make this legal to share with the public, I had to calculate a sample annual percentage rate based on the fees presented in the net sheet page. Then we actually get to the payment. The principal interest payment is on the loan amount, but we also have to account for the monthly amount for property taxes, homeowner's insurance, and PMI if there's any, in order to come to the total PITI monthly payment amount or housing expense payment that we use to qualify a borrower. At the very bottom, I show the approximate income to qualify based on the parameters of the net sheet, and the limitation on how much you can have in other monthly bills before you exceed what's called the bottom qualifying ratio. Let's now move over to the right hand side where I have the qualifying income grid. You will note that the page has the same sales price as the net sheet page when it's open, and I have the same 4 columns of loan amount, and in fact the top of the qualifying income grid page is identical to the net sheet page, the down payments and the loan amount. Then I carry the total estimated cash to close box from the middle of the net sheet page and place it on the qualifying income grid near the top. This gives me the basic information that most borrowers are interested in. For a specific purchase price, they need to know the loan amount and how much cash it will take to close. And the details and the numbers are over on the net sheet page, but the summary amounts on the qualifying income grid page. Then moving down that page, I have a chart with a range of interest rates, starting at the low end and incrementing. So here you see the part that starts at 4.5%, then goes to 4.75%, 5, 5.25%. And once again, for each of the columns, I present the annual percentage rate for that loan amount and that interest rate. And then there are 4 pieces of information that the chart provides, and I show them there in the red boxes, and then blow it up at the bottom. The top left is your principal and interest payment for that loan amount in the column and at that interest rate. Below it is the total housing expense payment, the PITI payment. Then in gray is the income needed to qualify based on the qualifying ratios that I show at the top of the column there. And below the qualifying income is the allowance for other monthly bills before we would bump against the bottom ratio and need to address that because we don't fit the qualifying parameters. I also created a section for FHA and VA that was very similar with some slight differences. I only have 3 columns, one on the left for FHA, and VA then has different rules for a first-time borrower and a subsequent use borrower. VA also has things that are financed along with FHA, the FHA upfront mortgage insurance premium, and the VA funding fee. So we have the down payment, the maximum base loan amount, the amount to be financed of the MIP or funding fee, and the total loan amount. Then when we get to the non-recurring closing costs section, it used to be that both FHA and VA had closing costs that the borrower was not allowed to pay. So I split it into a buyer's column and a seller's column, and the pound sign coding with the numbers identify those items the borrower is not allowed to pay, and the asterisks are items that are actually negotiable. Then the rest of the page is similar to the conventional loan one. We have the prepaid closing costs, the total estimated cash need for closing box, and the monthly payment box. Moving over to the qualifying income grid, the top is very similar to the net sheet page, and then I pull the total cash for closing in, and then we have the chart at the bottom. What I learned using the Finance Magic booklet is there are only 4 limiting factors that prohibit a borrower from qualifying for a higher loan amount and a bigger purchase price. And 3 of those 4 factors are directly addressed in the Finance Magic booklet. The one that's not addressed is your credit. It doesn't address credit at all. But the cash to close and your qualifying income and your other monthly bills are all directly addressed. And that allowed me to start flipping pages once I knew those numbers, and I'd go to the highest price that all the numbers fit on, and I knew they were qualified for that. And there was always one of those 3 items that would be the limiting factor. When I flipped to the next page, that limiting factor was too much for what the page represented, and that's what we had to address in some manner if we wanted to get qualified for that loan amount. So the Finance Magic booklet was a wonderful tool because I could pre-qualify a borrower without getting my calculator out, and I could show them the reasons why they were qualified. I could illustrate the limiting factor that was stopping them from qualifying for more, and then start discussing solutions. In the early 1990s, I registered a copyright with the Library of Congress for the Finance Magic booklet, and I registered Finance Magic as a fictitious business name for me as a sole proprietor. My wife Nancy and I formed Mitchell & Mitchell LLC, a limited liability company, in 2001 when we moved to Nevada, and we switched the Finance Magic DBA by registering it as a fictitious business name for Mitchell & Mitchell LLC. Less Pain, More Gain, 10 Strategies to Pay Off Your Mortgage Faster begin as a cooperative effort by Nancy and I to create and publish a book. We'd already published another book that Nancy had written, and Nancy's actually completed about 85,000 words of the draft copy for Less Pain, More Gain, and she's been waiting for me to provide her with the finishing touches on the final strategy. I am now ready to do that, but I decided that the video snippet format just might be a more understandable way to communicate the material. In a book, we can only print static charts, but in the video snippet, I can illustrate in a spreadsheet how if we change a number, the results change. And I think that will be a better way to communicate the 10 strategies. This concludes video snippet 1B, focusing in on the Finance Magic booklet. Tomorrow's snippet will also be focusing in on the origins of Finance Magic, and video snippet 1C will take you from the Finance Magic booklet clear to the present. Thank you for listening.